Hello. So now we start unit 2 where we are going to look at international trade and payments. I am your host Elias. So let me take you through the outline for this unit. So in this unit we are going to look at specifically international trade and the payment systems, and then later on in unit 3 we are going to develop the payment system further. So under here we'll start by looking at Zambia's trade volumes and the trade position. So we will look at some data of Zambia's exports and see the trading partners, and maybe see how Zambia has benefited from international trade. And then we will look at trade based on absolute advantage. And in addition to this, we'll build this to trade based on comparative advantage. Given that now we know, after understanding the trade which is based on comparative advantage, we would want also to look at the gains from trade as well as the terms of trade of a given nation. In addition, we'll look at trade restrictions, and finally the last thing we'll look at will be the balance of payment. For further readings, you can read Essential Economics for Business, which is the book that I shared with you. Okay, so let's quickly go into the introduction of international trade. So when we are talking about international trade, basically we are looking at the movements of commodities or services from one nation to the other. As such, international trade facilitates the movement of goods between or among nations. Now, when we say goods, you take note that we've just used this as a general term, but international trade involves the movement of both goods and services across borders. Now, in the absence of international trade, nations would have to produce everything that the people in the nation need. So as such, to avoid this, you will see that nations will engage in international trade because of differences in their factor endowments. And as such, you also look at, in addition to this, you also look at the efficiency levels in the production process. If the nation is less efficient, it is likely to produce less of a given commodity, and thus necessitates the need for imports for it to be able to meet the needs of the people in that nation. And if it is more efficient in producing a given commodity, such a nation will produce more and export the excess to other nations that are inefficient in the production of that commodity. We will look at this in more details when we go to comparative and absolute advantage. Now, with this then, nations will produce more goods, as earlier said, in which their efficiency in production is high, and then export part of the output to other nations. So you should note therefore that international trade consists of two categories. That is, number one, trade in goods and trade in services. Now, when we talk about trade in goods, we talk about the export and import of tangible commodities that can be consumed directly or used as inputs in the production process. So if you buy, say, commodities from any given nation, bring them to Zambia, those commodities will be looked at in two ways: whether they are consumable or they are supposed to be used in the production process as inputs. So if they are, as long as they are tangible, it means we will categorize them as goods. Trade in services, on the other hand, involves the export and import of intangible commodities. For example, Chinese road construction service in Zambia is an import that Zambia has made from China. So the money is being paid to the Chinese nationals for the construction of the roads, and this money then will be taken to China if we assume it that way. Definitely that is likely to be the case. So money will be taken to China, which means Zambia has imported. Remember, when we looked at the circular flow model, we said that an import is a leakage out of the model because money will be going out of the nation, and what you will have is the service that you will have received from the people you have imported from, or from the nation that you've imported from. Okay, so if we look at this from the Zambian perspective in more details, we see that Zambia produces more copper and agricultural products, which it exports to nations that are inefficient in producing these two commodities. Now, you will see that Zambia has created a market with other nations, and these are called the trading partners, where the copper and the agricultural products go. In addition, Zambia also imports commodities from these other nations, and from there, Zambia sees what commodities are inefficiently produced locally, and therefore, this necessitates the need for the imports. So with that, we see then that international trade helps us understand four things. First is the basis for trade, then the pattern of trade, the gains from trade, as well as the basis for trade restriction, among other things that we can learn from international trade. Now, with this, then, we therefore look at international trade in two distinct categories. The first one is trade theory, which analyzes the basis, the pattern, and the gains from trade. So the first three, that's the basis of trade, the pattern of trade, as well as the gains from trade. These will be analyzed using trade theory. And when we move to trade policies, we will examine the reasons for and the effect of trade restrictions. So the last part here will be analyzed using trade policy. Okay, let's look at Zambia's trading pattern. So if we use 2018 statistics, we see that Zambia's key export commodity as at 2018 was copper, which accounted for about 75.1% of all the total exports that Zambia made. Beyond this, we see that we have inorganic chemicals, which accounted for about 2.2%. We also have books, newspapers, pictures, salt, sulfur, cement, machineries, and so on and so forth. This is how the top 10 export composition for Zambia was as at 2018 using data obtained from worldstopexports.com. Okay, so we can also look at Zambia's trading partners as at 2018. So the key trading partner was Switzerland, which accounted for 41.9% of total exports that Zambia made. In other words, Switzerland made a huge market, then followed by China, which accounted for about 14.7% of all the exports that Zambia made, and then Democratic Republic of Congo and Singapore in the fourth position. And then we have other nations coming down, and this information was also obtained from worldstopexports.com. So this is the position of Zambia's exports, especially in the angle of trading partners. And we see that all these nations have different items that they obtain from Zambia and in different quantities. Okay, so we can look at this in more details, but maybe before we go to the comparative advantage and then analyze Zambia's position, we can also conclude on how Zambia's position was in Africa. So as a 2018 statistics, Zambia was ranked number 13 in terms of African exporting countries with an export share of 1.3% of the total African volume of exports. Now, with this, the key commodity that contributed to this 1.3, remember, is the copper, because Zambia export is highly flooded with the copper. So with this, copper accounted for about 75% of its total exports, which still tells us that Zambia is still heavily dependent on copper as a major export commodity. There has been a call to divert from the dependence on copper to other commodities and other non-traditional export commodities, and this has been effected. So we expect to see some changes maybe in the near future in terms of export composition for Zambia. Now, with all this, you may have to think about how the coronavirus has affected the volumes of export for Zambia, especially this in 2020. So go and look at the statistics and compare with the 2018 statistics and see if there are any changes. So you can also look at the 2019 data so that you are consistent and be able to tell what changes you'll be seeing from the data, and see whether Zambia is still on point and in terms of the trade volumes, as well as checking whether Zambia is recording a surplus or a deficit, and what are the reasons for the gaps that you will be observing. Okay, taking it on the from the looking at it from the global perspective, we see that different nations have different shares of export, and using data from 2014, we see that other European nations, which consisted of those European nations that have not been listed here, accounted for about 19.4% of total exports, and then other Asian nations contributed 17.9% of the total exports. Looking at Africa, Africa accounted for about 2.9% of the total exports. And remember that it is out of this 2.9% where Zambia accounted for 1.3. So it's 1.3 of the 2.9% of the total exports that Africa made. China, which is one of Zambia's major trading partners, accounted for about 12.3% of its total exports. So we see that here there are many countries, and if you check through, you will see different statistics. I also advise you to go and look at trading data for other nations, as well as the import side of statistics, and look at how Zambia performed in terms of imports and who are the key importing partners for Zambia. So thank you very much for watching. If you have questions, please send an email to moaelias@gmail.com. I will see you in session 2, where we'll begin the theories of international trade, and specifically we will start with the absolute advantage. Bye bye.